Good morning, everybody. Peter Ciccone doing a special installment of Diner Discussions. We happen to be at Zorn's of Bethpage. We were at one of our locales that we like to use, the Embassy Diner, but it was just too loud, so I have a special guest, this guy I've been trying to hook up with for a while, and it's right in time. John Gambino of Country Mortgage. Cross Country Mortgage, I'm sorry, I have it written down here. Cross Country Mortgage. And he's talking to us about mortgages. And just in time, John, what has been happening with the mortgage world?
Well, rates are extremely high right now, and out of the norm. We got spoiled in the last couple of years with rates being at historic lows, and we told everyone refi. And if you didn't pull the trigger, now you probably missed a good opportunity. But rates are a little higher. But there's still a lot of purchases going on.
So the refi portion of your business is kind of curtailed.
Oh, 100%.
Okay.
Yeah, if you survived off of refinances in the past, you're drowning right now.
Okay.
There's no way. You need to be doing reverse mortgages. You need to be doing purchases. You need to be doing non-QM products.
Right, you're talking about from your
special
side,
products.
but from the mortgagee side, the person who's qualifying for the mortgage. What are they looking
So
for?
as a homeowner, you're not refining right now.
No.
Because you probably have a better rate already than what you would have now. So why would you refi? Unless you had extreme debt or were going through a divorce, where you needed to buy your spouse out of the other person, you're not going to refi right now.
Okay. You told me before there are 4 key factors to qualify for a mortgage.
Yes.
What are those 4 key factors?
4 key factors to qualifying for a mortgage. First one is called loan to value. Simply put, that's how much equity you have in your house. Or be looked at as your down payment, what you're putting into your house.
That's loan to value, your
Yes.
down payment.
Mm-hmm.
Okay.
So your next key factor is called debt to income ratio. That is your total monthly debts divided by your gross income. So
Okay.
your minimum monthly payments, your debts tallied up.
Your debt to your income ratio.
Right.
How much you make versus how much you
Now
spend.
there's different programs that give you a higher debt to income ratio. So for example, an FHA loan product, you can have a higher debt to income ratio than you would on a regular conventional loan.
Okay.
All right. Your third key factor is assets. It's a compromising factor, not so much a qualifying factor, but that's anything stocks, bonds, 401k, 403bs, anything that works as a safety net in order to say, God forbid you got hurt at work or something, how are you going to pay your mortgage?
Okay.
Right. So it's all about risk.
So they're looking for 3 to 6 months in assets, you say?
Three to 6 months generally is like rule of thumb on most
Okay.
loans.
That you could pay your mortgage for 3 to 6 months.
It just
So
shows that you have something in reserves.
$20,000 in the bank for $3,000 a month.
Nothing crazy.
Okay.
All right, and then your last key component is obviously credit score. Credit score. All banks in the entire country work off the middle credit score, off the lowest borrower, between TransUnion, Equifax, and Experian. Those are your 3 credit bureaus that make up your FICO, and there you go.
All right.
And then credit score plays a huge role in pricing also. So the way pricing works, there's 20-point increment buckets. So if you were, say, a 702 and I was a 718, we're in the same bucket. But if I'm a 722 and you're a 718, we're in a different bucket.
Really?
Yeah. So
That's
that
why it's-
could affect pricing as well.
And that's why it's important to check your credit and know what
So
your credit
you
score
definitely want
is.
to know what your credit is. There's a whole list of do's and don'ts that I love to give the clients when they're purchasing a house. I love doing purchases. I think it's great because so many people don't know the process. I give them like a little monopoly board. They walk through their process.
Okay.
And then I'm able to connect you with other professionals that I trust and I use that you're going to need in this process as well. You're going to need homeowners insurance at some point. I guarantee you don't have a title person, right? Not everyone knows you're allowed to shop.
Well, I run entrepreneurs across America, so I have 2 titles.
Well, you do, but that person probably doesn't, right?
Alright.
So,
Yeah.
most people don't know they could shop for their own title.
Alright.
Most people, a lot
Shop
of
for your
people
own title.
don't.
What does that mean, shop for your own title?
Well, title is part of your home buying process,
Okay.
right? It's your security blanket on your property. So,
Okay.
But you're allowed to shop out companies on who's doing that work for you,
Okay.
right? So a lot of times you just leave it up to the attorney or you take the recommendation of your mortgage banker or broker or
Person
whatever
he
it
gives
is.
you. That's one of those
Yeah.
questions. People don't
You
even
don't
ask
have-
that question.
A lot of people don't have a home inspector. A lot of people don't have an attorney that they use for real estate.
Who
right?
specializes.
You don't want just any attorney
No.
out there. You want someone that does real estate consistently every day.
who
This is
asks the right
their bread.
questions, who looks at things you're
100%.
not looking at. It's law's like anything. It's like you don't want the eye doctor doing your heart surgery. You don't want the divorce attorney closing your
course.
mortgage for you, helping you close on your new property. There's specialization.
We have a great network and team.
We do.
That we use. So
Okay.
on that aspect, we're blessed.
Now you're at Cross Country Mortgages.
Yeah,
That's
it's
a bank.
It's
Tell
the
me,
third largest direct lender in the country.
what is a direct lender versus a broker?
Well, direct. Let's compare it to a bank.
Okay.
Right. So like the big banks are FDIC insured, and right. So they could, politely way of saying it, they could kind of make up their own rules.
Okay.
Right. They could just you walk into Wells Fargo, and Wells Fargo said we're not touching anyone below a 720.
Okay.
Well, I could go all the way down to a 580,
580. Okay.
depending on if you're putting enough down.
Okay.
Right. So
And
those
what-
key factors they sway. Look at it as like four legs of a table.
Now you told me a lot of people are under the impression they need to put 20% down.
No, they don't.
you're saying-
You
yeah.
could go as low as 3% down on the conventional loan, 3.5% in an FHA loan.
Okay.
FHA loan is government backed. It's a great product for first time home buyers. You could have a lower credit score, right, than what you would be approved with a conventional loan, and you will also have a higher debt to income ratio. So there's a little more play on your income and your debts.
And you told me that the bigger factor in what your rate is going to be is your credit score, not
Credit
the
score is a
percent.
huge factor.
So not the percent you're putting down so much,
Not
but
so much, but that does play a role.
it does
in
play a role. But the big factor is credit score.
Credit plays a huge role in everything we do financially.
So what are some of the
But
the
down
do's
payment
and-
absolutely matters. So if you're putting
Okay.
if you're putting 5% down and someone else is putting 10% down, that obviously is going to matter because
Okay.
you change your every 5%.
And you change your debt to ratio.
Yeah, if you're putting 11 and I'm putting 13, that's not going to matter.
Okay. But you are affecting the debt to income ratio when you do that. What are some of the do's and don'ts for your credit score? Not that you're a credit coach, but you said you give a list out.
Can I read them off?
Yeah, very quickly, you can read them.
So do's and don'ts that I tell people when they're going through their home buying process: don't change any jobs. If you're self-employed, don't quit your job or anything like that. Don't make any large purchases such as furniture, automobiles. Avoid using cards excessively or
How come you
late
can't make
payments.
a big purchase?
Why would you want to make anything that's going to change your debt to income ratio?
Okay, so, all
So
right.
if you qualified and I pre-qualified you already, and we know your numbers look good, and you go out and you go buy a brand new Lexus, and now all of a sudden,
Now
the
I have
maximum you used to have that was $400 a month, now is $700 a month.
Okay.
You just changed your ratio.
Okay, that
You might not
explains it.
you might not qualify now.
That
Don't go buy a boat when you're trying to buy a house.
Don't buy a boat at the same time you're trying to buy a house. That is
You
fair.
know,
We touched upon it briefly. You said something I thought was profound. Reverse mortgages. What did you say about them? I thought it was great.
it's like, I said if you're an elderly person and you're looking to stay in your house, it's a great product.
It's a great product. I know there's some bad.
It gets a bad. Used to receive a bad name because of the way the guidelines were set up back in 2005. First off, the housing.
But in 2023, it's a
It's a
solid
great-
product.
it's a solid
If
product.
you want to stay in your home,
The value of your home now compared to what it was 20 years ago is 3 times the amount. All right, and the guidelines change. You can't be 55 anymore. You got to be 62, and it's great. You have 3 payment options. I've had a couple really good success stories that people that utilize the reverse mortgage. Terrific.
Okay.
My own grandmother, she was 90 years old, and she's not leaving. She's not leaving her house. She's been in the house since 1948. She's not leaving the house.
and from the mortgage person's perspective, that's a growing marketplace. And when times,
Of course.
like now when interest rates go up, that market's only growing. So it's a good opportunity if you want to stay in your home and things around you, and you're unsure about the future. It's a great product to look into.
It is. It's a great product. We can sit down and talk about it anytime.
John, in Diner Discussions, we ask everybody the same question. Do you love what you do?
I do. I love what I do because I love working with. I try to really gear toward first-time home buyers
Okay.
and people doing purchases.
Okay.
And I love walking them through the home buying process.
All right.
That part I think is the one thing that really sucks me in because people just don't have all these connections, and I'm blessed to have a lot of good professionals in my network where I could give a lot of easy referrals out
Good.
and really help someone else. It might help you as the home inspector, but you're also making me look good when you do a great job on your home inspection and the client comes back to me very happy with what they found.
John, thank you very much for doing this. We tried to get this a couple of times, and entrepreneurs across America, EAA Diner Discussions, and we hope you love what you do. Thank you.